So if you're in trades, if you're thinking, I want to catch a piece, what you should be really careful about right now is defining how much of a piece you're looking for. And that's a big adjustment that I've made in regard to expectations for number of days. I don't think things are going to go for 10 or 12 days. I mean, it's unlikely. If it does, hopefully I have a little piece left, but I'm looking for 5 days, right? 3 to 5 days. And then I'm going to, instead of taking a little piece to pare down the trade, I'm going to take half. It's not gotten to the point where I'm taking more than half yet, but I'm taking half. I'm going to pare down with a bigger chunk. So subtle, but those are the kinds of adjustments that I think we need to make when we're in this type of a market. The other thing is that our posture has dropped consistently. We dropped, we got to that 4 to 5 level, and we were there for a few weeks, and it was like, can it hold? It feels like it maybe can. And then this whole political shebango of escalation with Ukraine, escalation with tariffs, and it really kicked things into gear. We ended up hitting corrective territory yesterday on the S&P. We're already at 14% on the Qs, on the NASDAQ. So any rally we see now, we have to be very suspicious that it is a bear trap and that things may get worse before they get better. And the question we ask ourselves is, am I willing to speculate on that to the downside now that the market's pushed us to this level where we're much more willing to speculate bearishly? It's mainly been hedges and a couple of speculative trades to this point. As the market continues to shift, we continue to look to orient our portfolio allocation in a way that reflects what we see by way of market conditions. So, good morning, LJGO. You are right on time, obviously, because good morning, everyone, and welcome to the Market Watch Group, Wednesday Market Midpoint. My name is Scott. I will be your host. I will be your friend during these trying times of the market. It was funny because my wife was talking to me, and, we were like talking about recession, talking about market conditions. He's like, and it's like, I said, look, we've been here before. We've seen recessions before. We've traded through recessions before. I've seen sideways markets. I've seen bear markets. I've seen a lot of different conditions now at this point, and we just see cycles and patterns. That's what we're going to try to break it down to. Cycles and patterns that are oriented in what? Supply and demand. That's our core orientation. The disclaimers: education, illustrative purposes only. We don't give recommendations to buy or sell any security or financial product. We're not brokers. We're not advisors. What are we going to do? We'll look at the opening analysis. CPI came in cool. There were concerns for sure. I think everyone was like, oh shit. What's this going to be? There may be, but it came in cool. Great. Okay. That's something to... If we see some de-escalation in the tariffs, we saw a piece of it already yesterday. I don't know if you noticed, right? The Canadians were like, all right, well, then we're going to hit electricity. And then Trump's like, all right, well, then we're going to double up. And then it was like, then those two pulled back. And it's like, okay, it's... I mean, it kind of feels like a bit of a pissing contest. I mean, now Europe just announced some, so I'd like to see some de-escalation by way of as far as that goes, for sure. But seeing the CPI come in was nice. We'll take a look at that. We'll just look at the orientation of our market posture. It's heading to zero unless we get a strong recovery. And we could. It's Wednesday. We could. I mean, this could be like boom, boom. We get 2 big days. We already had 2 big days down with volume. So our short term, our volume, both of those are in danger. Long term is in danger, right? VIX is absolutely in danger. Yeah, we're in danger of losing again unless we see the buyers So far, in the last 15 days, there's been 3 buy days. And they all came with good volume. So it's not like, but it was like the buyers were peeking up a little bit and the sellers just slapped them in the eyeballs. And then the next time they peeked up a little bit, slap right in the eyeballs again. Damn it. Right? And they peeked one more time, smack. We haven't strung together 2 days of buying yet. And the thing is, for me, if we do string together like 3 days of buying, I'm not going to be celebrating like, okay, here come the buyers. I'm going to be like, oh, all right. So, yeah, we find ourselves in interesting times. We haven't seen something like this since, I believe we hit a 0 in our posture in October of 23 as a group. And you can go back and look at that. But in October of 23, we had a correction. And it hit 0. And here we are. We hit correction. And what did we do yesterday with the Qs? Sorry, I'll get off the agenda and get to some charts. Let's go pull up the futures so we can at least see what the green looks like. Here's the ES. Nope. With the Qs, we measured where 80% mark was. Wasn't close yet. We are still 6% from that. But guess what? We looked at the Russell, the small caps, and the small caps are within a percent of being declared in a bear market. It's 20%. Down 20% from the high. You've entered bear market territory. It's not like a gut feeling, right? It's not like recessions where there's a recessionary declaration committee. I do declare. So interestingly, the futures show 4 days. This is really more of a pause. If you see that one on the S&P, on the SPY, that was a red day. Here it's a white day. But we had a one buy day there, good volume, immediately overcome, and then a second sell day. Then we had a up day, immediately overcome, pause, overcome, and then here we are. No, I'm not going to increase the limit yet. Okay. Questions, comments, concerns. This is just the start. This is the futures. This hasn't happened on the SPY yet. This is what we see on the SPY. When the SPY opens, we're not going to get this type of a candle. That's one of the interesting things when you look at the futures, which are trading 24/5 versus the SPY. We opened here, and now we're moving to here. This is where we're going to open on the SPY, right? So how will this look if I go back? Yeah, so what's going to happen is where that red line is, the futures were down here, and then they moved up, but now we're here, so we're likely to open, and then we get to see, right? That's where we're going to be. So is that going to look astounding, right? When we go look at the futures, we're like, oh, the futures look pretty good. That's not bad. No, what am I looking for? Oh, shoot. Let me move this over. There's the opening bell. 0.96 on the S&P, 0.5% on the Dow, 1.5 on the Nasdaq. Okay. What's the news? Inflation data cools in February. Did it give us the numbers here? We were at 0.5, down to 0.3, and then it came in at 0.2. 3, we were expecting 2.9, it came in at 2.8. Core CPI, you can see across the board, we beat expectations across the board for the month of February. Tomorrow we've got jobless claims expected back in the low 225s. So remember, there was like, it hit 250 and there was like, this is the highest we've seen in 7 months. And it's like, okay, just relax. We're back in the twos. PPI comes next, a little less important, but still important. So plenty of information still to come. Let's go look at how we opened. There's the gap up. There we are. Okay, so I mean, if it gets all the way to there, what is that representative of? We've got this old touch down there. You can see if I go back across, it cuts right through those areas as well. Resistance, support, transition for a minute, and then you can see it hit support, and now it's... So if we got all the way up to here in this area, we're just barely past the 200 day. We're nowhere near the 100 or the 50. When in fact, when things start to fall, I oftentimes will look at this little zone of the 50 and the 100 as where it might get to, and then hit some resistance and bounce down again. Yeah, I got to tell you, for me, I'm thinking we haven't seen the bottom yet. Is Stephen D here? He agrees with me. He's not here yet. Okay, fair enough. Yeah, look. As far as what we're thinking about here from a trading perspective, you know. Now, let's say the rhetoric just all of a sudden dies on tariffs. They're like, you know what? And I said, I don't care. He can come out and be like, I have vanquished the world with my trade policies, so I am no longer going to have to use my tariffs. I'd be like, well, congratulations on your victory. I don't care if he says that or not. I'm not. And let the market prevail. That's what I care about. Let the market trade. So I don't have to worry about news. But if that were to happen, we would see something like this. Bam! We'll be right back up here in a heartbeat. And we'd have one of those V's that we talk about, the V reversal, right? Am I expecting that? Like, is that my prediction? No, 100% not. But if it happens, and you want to be a part of that in any measure at all, you got to start now. You start now or you spectate, right? Well, that's not true. That's not true. I guess you could come in through here if you felt like the volume was enough with a tight stop and then try to ride the rest, but it's hard. That's hard. So that's why when I put the Apple trade on, it's like, hey, if this thing holds, it didn't hold. Yeah, okay. Fair enough. Same thing here. I had a couple of bullish. We put a bullish alert out yesterday. How's that looking, by the way? Where's my watch list? We'll get to that here. A lot of green, obviously, now. Huh. Guess where there's not? Apple. AEE. So this one gave what I thought was a valid signal, but then it's on a bit of a hiccup here. Okay, so if the hiccup stabilizes and turns, I think we still have valid consideration. So one of the things we're going to be looking for is how many of these have broken their consolidation, right? Amazon is not one. Whoops. Son of a gun. I mean, it's kind of like in that area, but for me, at this point, if this thing makes a move, I would probably draw this one like through here, anywhere in there, and you're thinking, you know what? I actually feel like there's a put opportunity here. If we move up, this is going to move up into this area, and this is what I'm looking for. When the buyers fail and the market moves another level down, that's when we'll have bearish opportunity, right? So right now, what are we trying to do? We're trying to decide if we're going to trade bullishly, how much we're going to have, where we're going to put it on, and how we're going to manage those trades. Right? And maybe you think, hey, I'm going to put a couple on early, and then if it does catch, I'm going to maybe try for one or two more on a continuation trade. And at that point, you would have a decent spread, a decent mix of risk. All right. Oh, Bakebe. Alibaba. Yeah, I felt like there was some choppiness and some concerns there. Bank of America financials are still just looking not great. BX, hardly a blip. That's not a, hey, look at the buyers doing a little smash and grab. That's buyers peeking their head up, looking to get their eyes smacked. Caterpillar. Okay, so I actually, and you might look at this and be like, oh, another horrible one. For me, it had some volume when it did it. There's some above average volume for the buyers, and it made this. That is a move right there from low to high. That's not one of these little one-day pitter-patters, right? None of those mean anything. This is very different. When we see a big chunk of buying like that, we're like, oh, hey, hello, buyers. Good to see you. Then what? Well, then we watch for the next half of the cycle. Buyers first, sellers second. You can see we've clearly transitioned into the selling part of the cycle. It's coming down. And it's where? It's just kind of sitting nicely on top of this line of ours. It's so convenient and nice to do it that way. So, yeah, I would consider this. Now, the reason I'm hesitant is because I actually think we have Fastenal setting up even better. So we'll see. Industrials trying to breathe some life into itself. Resuscitation. Sienna, no. Long-term investors are bullish, picking up some value plays. Press, I think you're onto something. That was definitely the conversation that Glenn was having. I'm always cautious of value because in the we had a little journey down memory lane last night when I bought a value play before I knew what I was doing with trading. I bought a value play on Lucent Technologies. This was in the year, 2001, maybe 2002. The market had come down quite a bit on its crash, right? So this stock had come from 70 or 80 down to 7. If that's not a value play, I don't know what is. But as much of a value as we think it is when our reference point is 70, 2 is much more valuable. Though at the end of the day, what happened to Lucent Technologies? The trading gods have claimed Lucent Technologies forevermore. So I'm always like, well, value. Let's make sure that at least my pennant, my pattern of penance to bring a stock back into the trading fold has completed itself. And then I'm like, great, let's go. We're good. We're okay. CLS, that's not enough. In fact, if CLS moves weekly meaning mildly into this area here and fails, well, we've got to look at the fact that it may be this old level down here. Where does that put us? somewhere around 65ish. That's a long way to go still. I'd say the next stop is probably maybe in here, and that's 70, and that's a long way to go from where we are. Something like this may have it was shark frenzied up. It may not be done giving it back. So these are the kinds of things where I'm like, the sellers clearly own this. And if the buyers make an attempt and fail, and the seller starts to come back, that's what we're looking for. CME. Do I ever use VWAP? I know VWAP is a popular one, but it's not one that I like. The volume weighted average pricing. So people like VWAP. That's gotten some favor. Ikimoku clouds and VWAP get paired. But yeah, it's interesting that you bring it up, because you'll see new. And it was interesting because Heiken Ashi was before that, where it started to get talked about, and then it just sort of fizzled. Like for a while there, people would be like, "Oh yeah, I've heard of Heiken Ashi." I just don't see it now. Whereas I do see that VWAP and the Ikimoku. I think it's Ikimoku. I like Heiken Ashi. Press says he likes the visuals of it coming from the right. Yeah, I get it. I'm certainly not anti any indicator. Right? There's a lot of good indicators I don't use. There's not like I have a specific reason for each one. Just simply, so I don't take that for like a mark against by any stretch. CME looks great. Just made a new high. We love new highs. There's not a lot as bullish as 52-week highs. I love that. And now it's pulling back. And as it pulls back, my thought is if it does another one of these where it just sort of slides on in, and I would actually be okay even if it retested towards these lows, but I'd prefer like maybe above 251.5 or so. We'll keep an eye on that. Cisco, what time is it? 7:43. We're doing great. Cisco broke the 50. We were like, it just kept not going, sinking. And it's like, I'll still watch it, but I'm likely to find a trade. Man, Delta just not good. Yeah, that's a lot of selling. Here's the Dow. So the Dow opened strong and it's giving it all back. We're down to flat. We're right back at not yesterday's lows, but yesterday's close for the Dow. Duke Energy gave it all back. You only got like this signal, then one day, and then it stopped, and yeah, I thought, did I miss something that I should have traded there? Nah, I don't feel like I did. Fastenal, okay. It got right back down to the level that I was looking for very quickly. But if it can hold, like if it comes up off of this low, and then a doji, and then it bounces and it gets off of this, maybe. Man, even the beginning of today, this FHN, this is looking like a dead cat bounce to me. Just got mangled on this one. So it's like the sellers came in and then lower high, smashed it down. We basically closed this gap at this point. But it may not be done. This may be a $15 stock. So it could have another $3 drop. That's 25%. FI looked like it wanted to. Now today we have this big engulfing pattern. I had a couple of these that had broken the 50 but not the 100. where I was like, something like this, I would think to myself, could possibly make a run back to the old highs or at least close to it. And that would actually be a pretty decent move, but it doesn't look like anything's developing there. Flex looks like a bear opportunity setting up. Remember what we talked about, right? We talked about the fact that any sustained bullish, and I only need 2 days, but gosh, I tell you what, we should be ready for one. We should be ready that even if it's just one and then it rolls, are we going to put bearish trades on? That's one of your first decisions you should make right now. If you're new, question number one, are you comfortable shorting or buying puts? And the puts are expensive, but they'll get more expensive if you're right. If you're wrong, and it will suck some volatility out. So that's one of the dangers of buying expensive puts, is when you're wrong, it hits a little harder. What do I mean by that? I mean that if the market goes up, which is wrong for your put, that also tends to drive implied volatility down, and that is what is a barometer of option pricing. High implied volatility equals expensive options. If that high implied volatility drops, meaning those expensive options lose that volatility, what's happening? The time value is getting sucked out. So you're losing value when that's happening. That is a danger. But I'll tell you what, bearish looking opportunities is definitely the flavor of the day for me. As I'm going through, I'm not like, oh, is this catching a bottom? I'm thinking, oh, if this thing makes a move up into this area and then just sort of like stalls out, then I think we're heading down to 30, right? That's the next stop down. Fox, sitting on that 50, he's trying. I think I can. Maybe. We'll see if it can hold. GE Vernova popping up. Does that look like a buy opportunity? No, it looks like it's going to get up to that 100, roll over, and give back. I mean, it's not looking great. Here's a new one, Gilead, a biotech. That looks fine. This is out of the healthcare sector. We ran a search. That was the only one I grabbed. I was like, I like that. XLV, if you like healthcare, that might be an option. Gold, flat. Gilead is healthcare. XLV. Did I say? What did I say? Yeah. Healthcare. Okay. I was like, wait, did I say that? Goldman. Oh, look at Goldman. Can't even get like its head above water right now. Not looking good there. Robinhood. I mean, you can see the last time it made this move here and then turned. So if we get up into this area and turn, maybe Robinhood's a $23 stock, $24 stock as far as the market's concerned. Tell me if I've missed one that you want to look at. Here's what I'm going to first say right now is you have permission to not trade. A lot of times when I work with people, they're like, I'm a trader. I need to be trading. It's like, whoa, wait, what? No. It's like the fisherman walking out with his pole into a hurricane. I'm a fisherman. I got a fish. Okay, buddy, get the oars out, get in the dinghy and row on out into the hurricane, see how it goes. Conditions matter. So cash is a position. I like to take small, like take a stab trades, just pick it a little up, a little down, find some balance. I'm going to stay busy. I'm going to stay engaged during this time, but I'm not going to expose myself to any high levels of risk, right? I'm not going to be like, there's no way from right now, I'm going to draw down 10%. There's no way this is going to happen. It's impossible from right now. I'm not going to put myself at risk to draw down 10% in these conditions. A couple percent? Yeah, maybe. Maybe. Right? But remember this. From the start of the year, the market is down 10%. If you're break even, you're beating the market by 10%. If you're positive 5 to 7% over the last month, you're beating the market by 12 to 14%. So make sure you keep a realistic perspective. But yeah, here's another one. Not trading yet, less risk. Yeah, understood. IBIT, I closed mine, so I closed the first half. I'm gonna say like I feel good about this. My first one, the target was 44. We got to 43.95. So celebrate automation if you had it on and it said, hey, if it gets to 44, take some profit for me. Beautiful. Beautiful. Then what? Then the next day, right around this 46 area, I got the rest out. If you're still in it, it's actually still kind of just like holding. And I'm actually thinking to myself, if this thing moves any more like into this area, I'm going to try again. I don't think we're done going down yet. Miguel says, so don't get too happy with all the green. Yeah, the fact that our posture dropped again down into a 1.25, green means set up for bear right now for me. It also means bulls. I mean, I am also looking for bulls and put a bull on, but green is definitely what just happened? I just got a weird signal from Zoom. Can you guys still hear me? Can someone just sound off real quick to make sure I didn't like shut anything down? Yes. Thank you, El Jago. Jago's in Yum. All right, you took it. Love it. Let's take a look at that when we get there. IBM channeling. ICE. ICE is setting up. I think ICE is looking set up for a trade. I like that. That exchange is doing great right now. Strength. IWM. IWM's given most of it back already. Small caps looking terrible. KMB. Maybe setting up here. Coca-Cola. Possibly setting up here as well. I've got a few defensives right here that I think could be viable. Bull flag on Kroger. MasterCard is off the table, but Visa maybe still. Yeah, like that right there for me on Meta, that doesn't make me think, ooh, I want to buy Meta. It's a value play. I think, ooh, if those buyers just like make a run at it and they just can't get it, if they can't get this anywhere above into this range and then it rolls, then I think, yeah, no, we're heading back to 550. 100%. It's hard for us to be too happy because our posture is just our reality check that's like, hey, the first 2 days of this week prior to this green day already were contributing to yet a third drop, right? A third. So right now we're just getting a green day just to try to like salvage the week, let alone actually make us feel like things are recovering. That's how I see it. And you guys know I am not a doom and gloom guy, right? I tend to find a way to like see some bullishness, but it is what it is. Right now we're in a bit of a shit show. So that's how we trade. Be water. Am I in a cup? Am I in a vase? Or am I in a shit show? It's a shit show. Let's figure out what we need to do to adapt to that until we get some signs of better conditions. And we want to know. We're not just like waiting. We're talking about the markers that we need to see that would be like, hey, if I see this and this, that's enough. I can do something with that. We just haven't seen it yet. Right? If you're new, one of my favorite sayings for trading This will be the cost of admission for this month and next. Learn to recognize the difference between what you think, what you feel, and what you see. Right? Be categorizing it. Do I think this? Am I feeling this? Or do I see this? Even as you describe something, force yourself, right? You're like, I think it's going to keep going down. Based on what? Based on what? Give me something that you see that says that, and then we can have a conversation. But if you're just like, I just think it, it's worthless. That means nothing, right? What do you see? So learn to recognize the difference between what you think, what you feel, what you see, and then throw out what you think and feel. Throw it out. Think, feel, see. Take think and feel out the window. What do you see? That's all I care about. What do you see? What do I see here? I see Morgan Stanley struggling to even put 1 day of buying in. I don't see up 1.83%. Well, it is up 1.83%, but I see just a struggle. I look at we're always thinking in terms of supply and demand. Do you look at this and think, man, look at the buyers. They're attempting to smash and grab here. Or do you think, ooh, look at the buyers. They're peeking their eyes up. And the way they're peeking their eyes up right now, sellers are about to smack them in the eyes. The market is always right. That's how it works. Lawnmowers don't tend to lose battles with grass. It's just how it is. Okay. Oh, shit. I thought I was doing great. Now I'm going to end up taking 5 minutes of time. Sorry, guys. Let me speed up. Microsoft, no. Netflix. Even that effort right there, it's not even close, right? It's entering the danger zone of like falling short of the 50 and then heading on down to test the 200. That's what it looks like to me. Okay, we took it. We got a little piece. This is what I'm looking for. If I get a piece and then another piece, it gets to 40, I might take a little. I mean, right? We're not. I said 41 and 42, and if we can catch like some momentum, great. There's not a lot of risk there. I mean, it ended up being a stock trade for me. Anyways, this is where we're at. Be water. NVIDIA. Yeah, NVIDIA. It's barely even testing. It's barely even testing right here. You took a piece closing, love it. What are we looking for? A couple of days, pair down, tighten stops. If this thing doesn't get back above, I mean, look, right here is probably the zone from here to here. Who knows where the next level is down. Sellers definitely are controlling most things right now. We have to recognize that. PM is another one I think has possibilities, actually. It's very defensive. In fact, of all the defensives, we had the 3 Ks, KMB, KO, and KR. I actually like PM better. If PM closes above 152.13, if we close in this area, up in this area here, I think I might. I wouldn't mind having another defensive-oriented bullish position. Give me your thoughts on that one. Q's, like what am I saying, right? Like no one's looking at this like, oh man, the buyers are so strong. You're looking at that like, oh God. 2 more days even, if it gets up to that 200-day moving average, it's hard to look at this and find a lot of redeeming value. Roblox. I don't know about you guys, but mostly what I'm seeing here is finally the start of some bear setups that I've been wanting to see if this market's going to keep dropping. And as our posture continues to devolve, to regress, that's exactly what I'm thinking about. See it there. See it through here. Here's a piece of green. But even that, right? Like, if at the end of the day, this thing is like just barely holding on, that's not a buy signal yet, right? I mean, it's up today, but giving it back. SPY. Okay, so let's go look at our opening range. The buyers opened the market because the futures were strong based on the news. How are they doing? Well, our opening range put us here, and we've already broken below the opening range. My opening range is the first 20 minutes, and we've already broken below that. It's trying to get back in. All right, I'll actually say it hasn't broken. It tested the opening range. If it closes, down in here now on this candle, then the opening range is broken, and I don't really see a lot of expectations that this is a strong bullish day at this point when that happens. Maybe when we come back from lunch, it'll have a different story to tell. A little hiccup, possible hiccup trade on Talon. This is the pattern, right? We broke up, got to here, pulling back. Yeah. Okay, something like that. So that's a maybe here later in the week for something like that. We're close. We're close to the end. Toast, no. A lot of things still dropping down. TPR. Looks like a bear flag. Tesla. Oh, that's a bear flag. Look at the vol on this thing, you guys. I mean, we thought it was high back here when it was sitting near 80, and then it just went. The market is not responding well to Elon Musk's involvement in politics. I don't know how long it's going to take his ego to check out, but it's an interesting phenomenon to watch. TSM. And I think there may be a nice opportunity to short that sucker again. So, or at least maybe like a short-term bear call spread, 1-2 week bear call spreads. High implied volatility means big premiums. So if I can sell some out of the money premiums in 1 week at a time, 2 weeks at a time, and just get some chunks, yeah, certainly willing to consider that. Twilio doesn't look good at all. The dollar is actually in a good place for the market to do well, coming down like that. Back here, as this thing was rallying, that was putting stress on the market, right? I mean, it was interesting because this last little hoorah was right when that was the day. I know because I left on my vacation, but this was the day right here when things started to fall. This was a contribution to it, is the fact that the dollar had all that strength was making it hard on the market. So this has eased up a little bit. Visa, nope. Visa's off too. There's just we can't do it. Let's look at the VIX today. So you can see the VIX is coming down a little bit. That doesn't come down like it's reversing. Like, oh, look at the fear bleeding off. That's coming down like we're in a bit of a cup and handle type situation here. Boom. If this comes down, turns, and if we break 28, we're in a bad place. If we break that 28, we're in a bad place. Let me see if I can real quickly show a little history on the VIX. I guess it's not terrible. Then if we pull back down and then push again, heading up into the mid 30s. So yeah, okay, we'll see. Walmart, I took off the table. Let me get that chart. It's just selling off too much. There we go. Yeah, not looking good. Not looking good. Okay, real quickly. This is the last week of the first loop this year for trading plans. Our trading plan is 8 sections long. Right? 8 sections long. Seems like a lot, but if you started with us 8 weeks ago, you have your first pass. First pass. Great. Now you have gotten the first, you've defined it. So round 1 is define. Round 2 is to refine. And then round 3 is to polish. After that, you tend to just focus on one section at a time. We did record keeping, which is the log. We did analytics, which is what you get done for you if you do the log. Now we've been working on improvement strategies. What are your goals? Process goals being what we're trying to work on. What we're focusing on is process goals. I would want to be focusing on weaknesses I identified in myself, setting a goal to overcome a weakness, setting a goal to improve my trading plan, setting a goal to improve my trading results. Those are the 3 core areas. So number 1 comes from the trading plan, comes from yourself. Number 2 comes from comes from the section of the trading plan. Section 1, weaknesses. Goal focus number 2 would be if there's any areas of your plan where you're like, yeah, my risk management section's weak. Great, make it better. Set a goal, then go improve it. And then the last place is when your record keeping, where you say, hey, I think I can get my average losses from 300 down to 250. I think I can hold my winners longer. I've been getting out too soon. I think I can improve, right? That's where we're looking at charts and trying to improve execution. But it's good to have one goal for each of those. One goal for weaknesses, one goal to improve your trading plan, one goal to improve your trading results. That's a great starting point, one of each. Okay, what else is going on? Glenn will be here. Can I check BKR and ASTS? 100%. Glenn will be here this afternoon for a full hour, and then both of us will be back tomorrow afternoon for our trading foundations. So if you're heading out, it's good to see everybody. If you want to stick around and take a look at BKR with me and Press, certainly invite you to do so, but it's great to see everybody. BKR. So I'm in consolidation, right? If all I do is connect these dots, it creates such a perfect line. And so for me, I'm not thinking this looks buyable yet. I'm thinking it needs to get up above this and then come back down. That's how oh yes, El Jago, of course. And Yum. It has had like an interesting little like, I don't know. If you were thinking about this one, I think that one could possibly give you like something bullish from here to here. Where if you were, but I don't know. That's how I see that. Like a lot of other things, right? Just under the weight of their current consolidations. That's BKR. Let's look at ASTS. I'm not familiar with that. ASTS. Good to see you, Sandy. She already left. That I like a little bit better, right? Is it because what? It just hit a 52-week high. I love 52-week highs. Had a good earnings, pushed it up. Now it's pulling back, higher low. But it's gotta give a signal. So if that's what you're waiting for as a signal, then I am in agreement. Trades 14 million shares, so that's good. Yeah, okay. I think you got something there. And let's go look at Yum Brands. Yum Brands is that KFC and Taco Bell? I always forget which Yum Brands is. Someone tell me what Yum is. Yum is look, you were looking at that for a bear. It just hit a 52-week high, but it was definitely overextended. And so if you were trading bearishly for the counter trend reversal, it's working. It's working out great. So be thinking about profits. Where are you taking them? Because right now it's in the process of potentially making a higher low. And if that happens, let's just say that tomorrow it does something like this, and then it does something like this, and you're thinking, what's it doing? Well, you could see one of these, and then all of a sudden, it wiped out so much of your gains when that, right? So we have to be very careful That's why I'm always cautious about trading bullishly or trading bearishly on a counter trend, basically, right? Because when it goes the other way, it can happen so quickly. Yeah, there you go. All right, it's good to see everybody. I appreciate the extra 10 minutes. I apologize if you had somewhere to be, but look, we're in a tough market. It is what it is. So trade accordingly, and let's make sure we have our markers for what will cause us to trade a little bit more. But right now, we're all about protection. We're in the shell to some extent. Like I said, I'm not too worried because I'm not going to put myself at risk in a manner that I need to worry about. It makes it easy. Thanks, guys. See you tomorrow. As always, happy trading.
Recording stop.